But I think, Sonia, two-wheelers and autos are in focus today.
So numbers are coming out, right, in a few days from now, and the expectation is that overall things will look good, especially in the passenger vehicle space, particularly for SUVs. But for two-wheelers, it's been a lukewarm start to the festive season, according to Elara Capital. Key rural states have been underperforming for a while. Are things going to improve? Jay Kale, Senior Vice President Research at Elara Capital, joins us now to talk more about that. Jay, at the onset, just tell us what is the expectation from the festive season this time? Do you see a big improvement in two-wheelers overall?
Yeah, hi, good morning. So, festive season, like we mentioned in our note, has started on a lukewarm, has got a lukewarm start. The Ganesh Chaturthi and Onam festival in Maharashtra and Karnataka especially. As per Vahan data, we compare it more to the FY19 volume peaks. That's around 20% odd lower. There has not been much improvement versus what was going on from April to August. That's how we compare the performance of the festive, because YOY might look a double-digit growth, but that's not really the true metric because of the low base. Going forward, I think, what is important is that the rural states like UP, Bihar, Jharkhand, Rajasthan, etc. have to bounce back. Because they constitute for a large portion of the festive weightage. Typically, the 32-day festive period retails 2x the normal sale month of retail. So it definitely has a large weightage. The trends in July, August have further weakened in rural states versus what the marriage season trend was in April to June. So that is a cause of concern. And we would want to monitor that in the festive season. However, I would like to point out that for our estimates to be met for the full year FY23, the ask rate for the festive season is not too demanding. It's just around 7% on a YOY basis for the Navratri plus Dashera plus Diwali festive period, which we believe is achievable, but that factors in some bit of recovery in the rural markets, which till now have been elusive. So we are gunning on a pent-up demand and non-agri rural demand bouncing back, which needs to be monitored.
Jay, hi, good morning. Let's talk about some individual companies. Eicher has been the strongest stock. What's your view here? That's, of course, in premium segment. So maybe a bit immune to rural slowdown, but your views here?
Yeah, definitely. Eicher does have a lower contribution from the rural states, and the urban doing relatively better does have its positive rub-off on the overall market shares as well. Apart from that, the newly Hunter launch, of course, these are initial days, has garnered decent enough response. But we have to see how that sustenance comes in post the cannibalization of the existing models. So while we believe over the next 2-3 months, Eicher numbers could look good because of the festive demand coming in and channel filling for the Hunter new launch model, we believe that the street is over-enthused over the next couple of years, replacement demand kicking in. And we've seen historically that post the initial phase of the new launches, the volumes are not able to sustain itself. We've seen that for the new Meteor, we've seen that for the new Classic 350. Overall portfolio volumes have not been able to meet street's expectations. So we currently have a sell rating on Eicher, and we believe that next 2-3 months could be good, but post that sustenance needs to be monitored.
What about TVS Motor? I mean, it's been one of the strongest stocks in the space. It's been hitting new 52-week highs almost on a daily basis. On the valuation parameter, how does it stack up now? And is the risk reward still favorable for a long-term investor?
So I think TVS Motors does have, they've been one of the only companies in the two-wheeler space who has a very strong success rate of new launches. And hence the street is betting on, with their upcoming new launches in the EV side, etc., they will continue to do well. From an engineering standpoint, I think they are one of the best placed to capitalize on this, emission norm change as well as the technology change to EVs. There are some downside risks to the export market, but I think overall, given the market share improvements that they're seeing in scooters and motorcycles, and with the margin improvement, I mean, after a long time, they are sustaining the 10% EBITDA margins in a challenging environment. And with commodities softening, that could improve further. So it will continue to remain a very strong earnings growth company, one of the highest in two-wheelers, and that will lead to the evaluations remaining expensive. So we are positive on the stock.
Okay, positive on TVS Motor. And how about some of these plays that, of course, TVS also has an exposure to Europe, but to a high exposure in exports. But I wanted your thoughts on, the others like Bajaj Auto, where there are problems not just in Nigeria, problems in Egypt as well, and exports have gotten hit quite badly. Do you think the worst is over, or is there more?
I think the exports of the for the two-wheelers, especially which are mainly in the African, LATAM, and Middle East, Southeast Asian countries, they are expected to see some downside risk. I mean, I think the street is still not factoring in a big decline in FY23, which I wouldn't rule out that possibility given what the last 2-3 months trend is and what the outlook for the next 2-3 months is, especially in these countries. And Bajaj Auto has the highest revenue exposure from exports in the two-wheeler pack, close to around 45-50% of revenues comes in from exports, and maybe even higher profits from exports. So that stock, while domestic recovery will aid them in the near term, but exports will keep that stock under range bound at current levels.
Okay, Jay, we'll leave it there today. Thanks a lot for joining us. So that's the view on autos from Elara. The market, by the way, has settled in pre-open slightly better than what the SGX Nifty was telling us.